Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zach Meir with the Bulletin Board Heroes on Thursday, the 27th of February here on Share Talk and sponsored by the UK Investor Show. Starting off with Bahamas Petroleum, if I can get the words out. Here we've got what looks like a rather messy mid-move consolidation. Shares tried to fill that gap there from the other week, just around the 3.5 pence level, and then shot back up again, which is a positive. Just need to break that little line of resistance over the last few days at 5.2 pence. End of the day close above that should lead us to the top of a rising trend channel from August, heading currently towards the 8 pence area. As far as the risk management is concerned, really, we don't really want to see the shares deliver an end-of-day close back below 4 pence, and ideally not even 4.5 pence. That dip that we've seen should have been the end of any flush out of the bulls. Next stock is one that I rarely cover, but is promoted today due to the lack of contenders in the small cap space. Obviously, it's been a rather torrid time with the coronavirus and other issues. Condor Gold here now heading towards last September's resistance at 28 pence. Golden cross there between the 50-day and 200-day moving averages to celebrate that achievement, and ideally an end-of-day close above 28 pence or end-of-week close above that number should be enough to take the shares towards the top of the rising August trend channel as high as 36 pence over the next month or so. Really, at this stage, no weakness would be enjoyed back below that late October peak at 24 pence. So that is the money management area to keep an eye on. Next on to Big Dish, which peaked at 5 pence earlier this month, but has come back towards the area of the 200-day moving average, around 3.3 pence at the moment. We've got an uptrend line there from January running through 2.8, and that's above the 50-day line at 2.63. We've been above the 50-day line basically since the beginning of the year, and while we're above that, looking for a retest of the 5 pence zone. End of day close, or a good decent end of day close, and then weekly close tomorrow above the 200-day moving average should be enough to inspire confidence that a retest of the best levels of the year to date is on its way. On to a next contender, which is one that I don't look at that much at all, but as I said, we're in a rather bearish phase, so a few unusual names come out. Here you can see Matomi Media gapped up through that line of resistance from August at 4.5 pence, and while above that, looking for a rather ambitious looking target at the top of a rising trend channel from February, heading towards 12 pence. Ideally, there's no breakback either below the 4.5 pence level or at worst the 50-day line at 4.14 pence at the moment and rising. One of the stars of the recent past is OncoImmune, and sort of bona fide fiery stock of the moment. It's bounced off former support on the way down at 50 pence this week and gapped up quite nicely. At least while we're above the 50 pence level, which is the floor of a rising January trend channel, we can look to, with some validity, towards that 90 pence target at that mid-January resistance line. 50-day moving average now starting to rise quite nicely, and obviously the whole rally here was started off by the gap through the 50-day line, so that is still a key part of the technical picture here. Next up, a stock which I wasn't expecting to cover again, but it is back, apparently, Pantheon Resources, with today's price action breaking that line of resistance from May at 16 pence, and the view here is at least while we're above the 50-day line at 15.9 pence, there may be some mileage in terms of the stock, at least either retesting the initial highs of today at 21 pence, or if they really get going, that line of resistance from April heading towards 28 pence, perhaps on a 2 to 3 month view. Finishing off with a bombed out situation, TriStar looks as though it's making an effort to do some good work after breaking that falling trend channel. Basically last week, the line in question currently running through around 12.5 pence. At least while the shares are above that, one would give them a chance of trying to retest that resistance after the fall around the 19 pence area, basically just beating the 50-day line, and then maybe after that we can see how strong the shares are. But at the moment, giving a good go in terms of a little bit more recovery there for TriStar Resources. That's it from me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.